This is Monetary Metal Masters. Disclaimer, this is not financial advice. Now let's talk about what's really happening in the markets. Because the signal right now is not in headlines, it's in relative value. Gold and silver are currently stabilizing. Not crashing, not breaking out, stabilizing. After extreme volatility, that matters. On the surface, prices look quiet. But when you compare gold and silver to currencies, a very different picture appears. Let's start with the US dollar and the euro. Both are in a long-term declining trend. Not collapsing overnight, but steadily losing purchasing power. The dollar is under pressure from rising debt, long-term fiscal stress expectations of easier monetary policy. The euro faces weak growth, structural fragmentation, energy, and geopolitical exposure. So here's the key point. When gold and silver are flat in dollars or euros, while those currencies are descending, metals are not weak. They are doing their job. Now compare that to the Swiss franc. The Swiss franc has remained relatively neutral and stable versus both the dollar and the euro. That's important. The franc is a classic safe haven currency. Disciplined monetary policy, political stability, low inflation history. When uncertainty rises, capital flows into Swiss francs, gold, and increasingly, silver. So what do we see right now? Gold and silver are holding value. The dollar and euro are weakening. The Swiss franc stays steady. That tells us gold and silver are behaving like monetary anchors, not speculative assets. Now add fundamentals. Central banks, especially outside the US, continue accumulating gold. They do not buy based on US jobs reports or CPI prints. Silver fundamentals remain tight. Persistent supply deficits, growing industrial demand, limited mine expansion. None of that changes because of short-term macro data. Yes, futures traders can create volatility. Yes, short-term price pressure happens. But notice what's missing. No structural breakdown, no collapse in physical demand, no loss of value relative to strong currencies. This phase is not weakness, it's consolidation during a monetary transition. Gold and silver are absorbing pressure while fiat currencies erode. That's exactly what stabilization looks like before continuation. If this helped you see the bigger picture, like this video, subscribe to the channel, and check the link in the bio for deeper analysis. This was Monetary Metal Masters.